In case the shareholder does not pay the amount due from his side to the company even after repeated reminders, the company has a right to forfeit his shares in accordance with various provisions of Companies Act 1956. Now let us understand what journal entries are passed at the time of forfeiture of shares. Like in this question, a company forfeited 500 shares of rupees 10 each. That means the face value of the share is rupees 10, but it is clearly mentioned rupees 7 called up. That means till date only rupees 7 have been called up by the company for non-payment of allotment money of rupees 3. That is, the company had called up rupees 7 and out of this 7 rupee, he has not paid rupees 3 per share. That means he has paid us 4 rupees. This is the amount that he has paid to the company. Once this forfeiture was done, 300 of these shares were then reissued at rupees 9 per share as fully paid, journalized for this particular case. Now students, the first entry for forfeiture of shares would be share capital account debited to share forfeited to, since he has not paid us allotment, so share allotment account. Now students, remember this account can be replaced by calls in arrears in case you have used calls in arrears when the amount was due and not paid by this shareholder, right? That means if you are using calls in arrears, then in the entry of forfeiture also, the particular call which has not been paid would be replaced by calls in arrears. So the entry is share capital account debited to share forfeited account to share allotment account. The amount is 7 rupees called up for 500 shares. That means 3500 for share capital. Forfeited shows or reflects the amount that he has paid, right? He had paid us rupees 4. So 4 into 500 is 2000 is the amount that he has already paid. And allotment money he has not paid for rupees 3 per share. So in lump sum this amount becomes 3 into 5, that is 1500. Narration is being 500 shares forfeited for non-payment of allotment of rupees 3 per share. Now students, it is clearly mentioned that out of these 500 shares that were forfeited, 300 shares have been reissued at rupees 9 per share as fully paid. That means a share of face value of rupees 10 was issued at rupees 9 per share. So the entry for reissue is bank account debited, share forfeited account debited, to share capital. Capital will always reflect the nominal value of fully paid up shares, right? So in this case 300 into fully paid amount is 10. So 3000 would be the amount that would appear in the share capital. Bank. These shares were reissued at rupees 9 per share. So 300 into 9 is 2700, and in case of forfeiture 1 rupee discount is being offered by the company at the time of reissue. Remember, this discount is not same as at the time of issue of shares which are being done originally by the company, right? So this should not be equated with discount on issue of shares, but this is something which a company is offering as rebate for reselling these shares. So this amount would be taken out of share forfeited account. So the amount would be 1 into 300, that is 300 rupees. And narration would be being 300 shares reissued. And the last entry would be of transferring the excess of share forfeiture money to capital reserve. So the entry would be share forfeiture account debited to capital reserve. Now students, remember the 2000 rupees that were paid by this particular shareholder was for 500 shares. But we have reissued only 300 shares. So let us calculate the proportionate amount for these 300 shares. 2000 was the amount that we had received for 500. So the proportionate amount can be calculated by unitary method as 2000 divided by 500 into 300. That means 1200 rupee. This was the proportionate amount for 300 shares that we had received. Out of this 1200, we have used 300 at the time of reissue. So that means excess available with us is 900. So this should be transferred to capital reserve. Narration being share forfeited money transferred to capital reserve.